All right, good evening, everyone. My name is Davon Reeves, the CEO and founder of Vesterr, and we are here to discuss again the Richlands hotel development opportunities to Fairfield by Marriott Inn Suites on Vesterr. The numbers changed a little bit, so we wanted to, the Richlands group wanted to bring the deal back to you all with updated numbers. So I am going to pass the baton over to Avery and the team. For those who don't know what Vesterr is, before I pass the baton, Vesterr is a crowdfunding platform where you can invest in commercial real estate, including hotels, where you can go to vesterr.com to actually invest in its opportunities or other opportunities, where you'll find a subscription agreement, the operating agreements, a previous recording, as well as the pitch deck. All right, so I'm gonna pass the baton. There you are, Avery.
Awesome. Thank you, Devon. I appreciate it. So I'm Avery Washington, and I'm a part of the group 133 Kuntz Fork Road.
So letting that breathe.
I think somebody's mic's unmuted, but 133 Kuntz Fork Road is the site where we're going to be developing a Fairfield Inn and Suites by Marriott, and that's in Richlands, North Carolina. So just starting out with the disclaimer, right? Investment involves risk. You shouldn't invest anything you're not capable of losing or going without. However, what I would say to speak to this is we've been audited by third-party accountants. We've had management groups create pro formas and scrutinize whether this site is suitable. We've done feasibility assessments, and we've also already personally invested and committed incredible amount of time and capital toward this endeavor. So there are a lot of people very confident in our ability to bring this to fruition, and that's why we're here today. So an overview. So Richlands, North Carolina is the location of the only airport essentially within an hour radius. The next closest to that is in Wilmington to the south, Wilmington International Airport. And to the north, there's a regional airport in New Bern, North Carolina. But here we have a large Marine Corps base, home of the 2nd Marine Division, the 2nd Marine Expeditionary Force. But the nearest branded hotels specifically are about 25 to 30 minutes away, depending on time of day that you're driving. Right. So last year, Albert J. Ellis not only added these flight options, but they've started setting things in motion to expand the services of the airport, including putting a contract in place to expand the runway so that they could have larger aircraft come in. So it seems like they're also laying the groundwork for additional flight options to be added and probably adding some new destinations going in and out of that airport. In the immediate vicinity of the site, we also have a lot of commercial development in Richlands, North Carolina, and you'll see that as we get to some of the following slides. So this is ideally located where you're in eye-shot, never mind walking distance, of the newest development in the town of Richlands. And our goal is to develop a 79-key Fairfield Inn and Suites by Marriott. So this is the team. I'll start with myself real quick. So I've been doing real estate investment since 2013, started doing development in 2021. I started out doing what are referred to as shovel-ready sites, and I'm in the process of delivering finished lots to some national builders and starting to do new construction on the residential side as well. In addition to that, I built out a portfolio in Eastern North Carolina, or roughly $6.5 million of assets under management. Depending on the city you're in, that sounds like not a lot, but here that's a few dozen units. And that's currently my background. And some of my colleagues, well, all my colleagues are on the call. So I'll kick it over to Toya, allow her to introduce herself to the group, and then we'll just follow on down the line.
Hello, guys. I hope you can hear me well. I don't have the best connection where I'm at. My name is Latoya Owens, and I'm a realtor broker in Eastern North Carolina. I am with Keller Williams, where I am a top producer, and I enjoy selling real estate, and I'm excited about this development project, as this is the first of many that I will be adding to my portfolio. And I look forward to working with all of you.
Thanks, Toya. You're up, John.
Hey, good evening, everybody. My name is John Hunter. I'm a 24-year Marine veteran. Been on the enlisted and officer side. I got a business in the car wash business in 2015. I currently have 7 car washes, working on number 8. So that's kind of my background is construction management, operational type stuff. And that's all I got.
Thank you. It's your turn, Ricky.
Thanks, Avery. Yeah, my name is Ricky Ward. I'm a licensed GC in North Carolina. Been building for 25 plus years in residential and commercial. Working in several different states right now, and I'm just happy to be connected with this group of guys. I had purchased this property we're talking about a couple of years ago, and I'm a native from Richlands, by the way. So the property that we have right now is something that me and one of the group, Bernard, will be talking next, have kind of threw around the deal for, I don't know, about a year and a half. And got kind of excited about putting a hotel on it, and we're working toward that end goal to do that. But yeah, residential, commercial is where I kind of flow. So these guys have the real estate background. My background is the sticks and bricks of the project. And once we start breaking the ground and moving dirt around is where I'll kind of jump in and throw my expertise in there. So
You said sticks
looking
and
forward
bricks.
to
I
it.
like that.
Thank you.
My name is Bernard McLeod. I'm a commercial and residential real estate developer. I am your spokesperson to Marriott for this particular endeavor. Some of my clients include Cookout, Waffle House, Wawa, Sheets, Roll Farms, just to name a few. We're excited to have you all on this call. We're excited to present this opportunity for investment opportunity into the hotel, and we hope you have a lot of questions at the end. Thank you.
Thanks, Bernard. And then the other members are Newport Hospitality Group. That is the professional management that we're putting in place to operate the hotel. All right. Their resume is actually a little outdated. At this point, they manage well over 50 hotels. They have some clients that own over 100 hotels within their portfolios that they manage for them, to include real estate investment trusts among many clients that they have. And then lastly, Hendrick Construction. They're out of Charlotte, North Carolina, so relatively local. They've got a vast amount of experience in various types of commercial construction. They've built hotels before, and we've been working with them to make sure we're nailing down costs and getting ready to make ourselves a hotel. So this will be done in 4 phases, essentially. We're in phase 2, right? We're rolling through civil engineering, municipal approvals. We already have all of those in hand. Most recently, getting water and sewer allocation for the site. We already have permitting. We've gotten a height variance for the number of stories in the hotel, things of that nature. And the next phase, what brings us here today, is onboarding all the capital needed for the equity contribution to close out financing for vertical construction. We're still pushing as much as possible to stay along this timeline, but this is what we're shooting for getting the hotel open. It'll be roughly 12 months construction timeline if we go with traditional wood frame construction. And then now some overview of the area itself. So that star in the center is the location of the site. As you can see in the bottom left corner, you see Albert J. Ellis Airport. And that's the airport that I was referencing when I gave that initial situation or overview about that nearest airport that we're reducing that commute time to. To your left, where we have that outlined parcel with the star in the center, that is the site. The site is already what is referred to as on grade, which is to say it's already clear, it's already more or less level, and there's already stormwater control measures installed to the rear of the parcel, as you can see. Additionally, the overhead imagery available to us is a little outdated. So that Starbucks emblem that you see is already open and operating. Additionally, right to the left of that Navy Federal emblem that you see, there is a Waffle House that has been constructed and is already open and operating. To the right of that left image, that strange orange thing that looks like caterpillars or something, or microchips, that is actually a part of the layout of a mixed-use development that's going to have over 350 home sites and some convenience stores and things of the like directly across the street. And then there are actually 2 more large-scale developments immediately southwest and northwest of this location as well. So there's a lot of growth coming into the area, in addition to that commercial development you see directly around the site. On the right side of this slide is the layout, including what the landscaping will look like for the hotel. We've opted not to try to bring additional food services or beverage services in the hotel, since it can vary revenue-wise and creates additional labor costs. But instead, we're working to attract a small restaurant chain to take an out parcel in front of the hotel. So that way guests have the ability to go to a sit-down restaurant in the immediate vicinity. All right, so now we're just going to get into the projections. So this disclaimer is simply to say that these are, after analysis, we have determined this is how we anticipate the investment in the property financially performing. All right, so to start, there are 2 different shares, or share classes, excuse me. There's a $20,000 share class, and that lends someone a 25% equity position in the hotel. And there's a $40,000 share class that gives someone a 0.5% or 0.5% equity position in the hotel. The relevance of that is you're buying a direct ownership stake in the entity that will own the hotel. So for those of you who qualify by whatever metric for taking advantage of depreciation on your taxes, a part of this would be getting issued annual K-1s so you can take advantage of being able to write off some of those depreciating items. And our plan to assist with that is doing cost segregation studies, determining what items we can have accelerated depreciation on within our hold period. Beyond that, I just have a simple layout year to year to show people what the minimum performance of the investment would look like based on it only compounding at that annual accruing rate being applied to it. But that is not accounting for the revenue distributions that people will receive once the hotel's open and operating, or the net proceeds from the sale of the hotel upon exit, which we'll get into next in a lot of detail. All right, so this is just laying out what the distributions of revenue will look like and the threshold for where it's going to start. So once we've achieved what's called a debt service coverage ratio of 1.25%, or 1.25, excuse me, which is to say, if our mortgage were $1,000, once the hotel has generated $1,250, from 1,251 and higher, we will be distributing that revenue, and it will be in line with the splits on the right side of this chart. And the way this works is just like the tax system. So we don't have the opportunity to just figure out how to get the DSCR to 2 and everything gets split 50-50. The way it will work is from 1.25 to 1.5, 80-20, from the dollars in the range of 1.5 to 1.75, 70-30, and so on and so forth. Right? So there's an incentive for us to perform to improve that split, but you get the benefit as the passive investor as we go through that ladder. Lastly, I similarly have the splits laid out for hitting percentages of the target sale price as well. Before I go further, are there any questions regarding what we've gone over? All right, I'll keep going. So, a group that we spoke with, they asked if I could lay out or give something that illustrates what the investment would look like over the life of the investment, including distributions. So I'm going to attempt to walk you through this to try to make it as plain as possible, but I even made an effort to show the math behind it as well. So if you remember a few slides back, I had this simple chart where it just showed your initial investment, year 1, year 2, year 3, year 4. What this does is it shows you, based on the pro forma we have in place, if the projections and performance match up. This is the exact amount of dollars that we anticipate generating and distributing over the life of the investment, and how it's going to be counted against whatever the outstanding balance is for that accrued dividend applied to your principal investment. I'll leave it here for a second for folks to look at before I jump to the next thing. And then just to clarify, so the numbers on the left side or the left-hand column and the right-hand column, they reflect what it would look like on an individual basis, right? Down the center, with the exception of the numbers in bold, it's reflecting the amounts in aggregate that are getting divided amongst the investors, but that number in bold is the amount the investor would be getting over that year's distributions as the revenue ramps up. This is the same except for the share class that has a 10% accruing rate. And then this is laying out the wave tops of some of the broad costs that we're anticipating currently. So we're expecting this to run about 8.6 million between land acquisition, holding cost, vertical construction. Some of these costs have already been paid. They're factored into it. That comes from the cash contributions that have already been made and are continually being onboarded from the general partners. But overall, we're expecting it to cost roughly 109,000 per room that we create. Also, to speak to the charts earlier where I referenced the debt service coverage ratio, for those who are curious, at the bottom row of this slide, you can see our anticipated ramp up of the debt service coverage ratio year after year as the hotel revenue increases. And then this is just the best contact information. If you're curious, want to learn more about the project, have any additional questions you think of after this call, feel free to email or text or call John and I. A few people took us up on that after the last presentation that we did, and we were able to walk through quite a few things. And it was really helpful because they actually pointed out some gaps in ways that we could better present information. And that's what led to me creating that breakdown, showing the performance, including all the distributions over the life of the entire investment. So that actually helped clear things up for quite a few people. So it's really helpful to us when you do ask questions. And that is it. So with that, I'd love to hear whatever questions all of you have. Trying to scroll through to see if anyone has done the hand thing.
So you see the email, right?
Hi, this is Vaughn Mitchell.
Hello.
Hi, is it possible for you to go back, I think, two
Absolutely.
slides? I think it's 2 or 3 slides. It really doesn't matter if it's the 20
This one or
not
the
this, yes.
okay.
It doesn't matter which one you use, the 20 or the 40K, but
Okay.
let me lower my hand. Could you explain the math behind this? Like, I understand the the column on the left side, but I
Mhm.
don't quite. Oh, okay, I kind of understand year one,
Mhm.
but is the end of the year balance? So if you put down 40K, you'll
Mhm.
get 3,000. We're just projecting. 3,100 by the end of the year. Could you just
For sure.
walk through?
Absolutely. So in year one, right, that accruing interest is 10%. So within year one already, we're going from 40 to 44,000. Now, once we get over the 1.25 and slightly over the 1.5 debt service coverage ratio, after the splits are broken down, the individual investor would receive $831.72 in that year. And that's why you see end of year outstanding balance come down $831.72 from what that initial principal and interest applied amount of 44,000 was. So we get into that next year in year two. Yeah, we get into that next year in year two. We've got that 44,000 again having that 10% interest rate being applied, but we've already paid $831.72 of it. So now that new outstanding amount, because we're factoring in that some of it has been returned to the investor, is 47,568.28. Now over year two, as the revenue increases, now that investor is going to end up receiving $1,425.89. So that end of year outstanding amount, once that's applied, we're at 46,142.39, and it continues in that manner. Does that make sense?
It does. And I guess so year in the middle column, year 1 through 4, that's the amount that you would get at the end of
So
that particular year.
So that number in bold in the
Right, in
middle
bold.
column is the amount you'd receive in distributions that year,
Mm-hmm.
in line with the pro forma or the projections we currently have.
Okay, so at the end, and I'm probably saying
Or are
or
you
thinking this
asking
wrong.
when you would receive it?
So once it's sold,
Mm-hmm.
is the year for the exit distribution? Is that what the 40K individual will receive? The 122?
If we sell at the target sale price, yes.
Mm-hmm. Okay.
Because of the splits. So specifically because of the splits for the net proceeds of the hotel,
Mm-hmm.
that is what it calculates out to. You
Gotcha.
getting just over a 300% return.
Okay, but okay, got it. But if you stayed in that 4th year altogether, you would accumulate at 52K.
Well, that 52,258 and 10 cents is the outstanding amount owed to the investor just based on their principal and their base interest rate being applied to it.
Okay,
But the total amount that they would stand to get is the
2,000.
122.66, and that
Right.
122.66 includes the 52 within it.
Right. Okay. I got it now.
So it would,
So
yeah, it wouldn't be like 175 grand. It would be
that
roughly
120.
122, including the outstanding amount to them.
Okay. So I'm just talking out loud and I'm sorry for being
Sure, no,
ignorant.
absolutely.
So the $54,334.13, that includes what that 40K, the principal and the dividend.
The
So
50,
go ahead. I'm sorry.
well, let me make sure I'm fully understanding your question. What else did you have? I want to make sure I'm not cutting you off.
No, you're fine. I think I'm understanding.
Okay.
So basically, maybe year 4 is not a good example, but the column on the left side, the year X, outstanding principal and dividend, that's that total $54,334. That's what that individual would have, or group, whatever it is, would
That's
have.
what the outstanding amount is due to them before the 2 distribution payments are made
Got
to
it.
them in that year. And then that's
Got
why it goes down to 52,258.
Got it. Got it. Because you
And
get the 2,000 at the end of the year, not the other piece. Okay, got it. I got it.
Yep,
I got it. That makes
mid-year and
sense.
end of the year. Yep.
Got it.
Yep.
I have a question.
Yeah.
Now, these figures are based on occupancy, yeah? As a question.
Yes. Well, these figures specifically are based on the pro forma and projections done by Newport Hospitality Group after they did their site visit. So I took their projections and I broke it down to the literal ranges per dollar for the amount that would be generated once we got above a certain debt service coverage ratio. But to speak specifically to your question, yes, these projections also incorporate anticipated occupancy rates.
Right. Okay, so what can I ask what the occupancy rate would be to get those figures?
Certainly. So initially starting out, they're anticipating the occupancy rate to be in the mid 70s range. I don't remember the exact number off the top of my head. And then they have it ramping up to us being in the low 90s as we get into year 3 and year 4. Additionally, something that we're going to be locking in place and finalizing a contract on once we start vertical construction is this hotel reduces the commute to the airport by 50 to 60%, depending on the time of day. It's 11-minute drive from this hotel to the airport. The next nearest flag hotel is 25 to 30 minutes away. And they're all clustered together all the way in Jacksonville, which didn't fit in that radius on the map. So what we've already initiated and started negotiating is the air crews that stay overnight that fly into OAJ, them staying in our hotel instead of going all the way to Jacksonville. And that'll end up taking roughly 20% of the rooms every night.
Okay. Thank you.
Absolutely.
So I just raised my hand. That means I have a question.
Okay. For some reason, I can't see hands at all. So I'm
Well,
trying
I meant to the camera. I raised my hand.
Oh, gotcha. Okay, you're in there.
So obviously this is my first event or first call. Can you help me understand why you're only going with the life? It sounds like a life cycle of 5 or 4 years.
Certainly. A couple reasons. One, because our goal is to get the asset. We want to sell the asset at stabilized value once we get into ramping up the revenue and the occupancy, but we also want to do so well within the lifespan of the major systems and well ahead of a need for a property improvement plan. So that's the main part of the reason for it.
Okay. Yeah, I guess my thinking is completely different. I don't know if I'm like one of the elders here on the call, but
Sure.
I'm looking for a long-term passive income.
Mhm.
So for lack of a better way of putting it, 5 years is not long-term,
Mhm.
at least in my mind. But that doesn't mean that I'm not interested. I just wanted to know why was the cycle at 4 to 5 years. But
Understandable. So those two reasons I just gave are big reasons why. Also, the other reason to go in line with those things is that, especially since the Federal Reserve is dragging their feet as much as they are on lowering interest rates, we also anticipate that this lower interest rate environment everybody's been holding their breath for is actually going to occur around the time where we're hitting this window where we're capital is going to be at the lowest cost that it has been in a few years. The asset is going to be at stabilized value, hitting its stride, and we're going to have all these elements of the hotel that are far from needing to be replaced, experience significant maintenance or repairs. So the combination of those things is a big reason for that window.
okay, I guess another question for me would be how expensive are you looking for your pool of investors to be
Okay. Individually or collectively?
collectively?
So we're raising 2.6 million and
Okay,
we can oversubscribe up to 2.75 million.
okay.
Mhm.
What is it individually?
Individually, the first share class is a $20,000 minimum. The next share class is a $40,000 minimum. And that's the difference between those accruing interest getting applied. The $20,000 share class is an 8% accruing interest rate, and the $40,000 share class is the 10% accruing interest rate. However, once you hit that minimum, you're not limited to only do blocks of $20,000 at a time. The shares themselves are $100 a share. Right. So once you get over that number, let's say if you had $22,000, you can do $22,000. Doesn't have to be that flat number. It's just the minimum has to be one of those two things.
Understood.
Mm-hmm. Let me see if there are any hands. Been missing them. Also, I saw some questions in the chat. All right, so someone asked, how far is Jacksonville? So Jacksonville from this site, I essentially live, I would say, kind of toward the center of Jacksonville. Depending on the time of day, the drive is 25 to 30 minutes to this site from Jacksonville.
Hey, Avery, did you want to also kind of hit on the DoD contracts that we have, or actually trying to work toward as well? I've seen that.
Absolutely. I'll speak to everything going on in the area. So the other reason why we're really confident in how this hotel will perform, a few reasons, and I alluded to it when we went over the overhead imagery slide. I'll go back to that actually. Right, so I mentioned this neighborhood off to the right in the orange, white, and green. But I also mentioned that there were two other neighborhoods to the south and northwest, and there are two other large developments north and south of this. Right, so once the hotel's open, you're going to have vendors and subcontractors building out these neighborhoods that are going to need lodging, right? And those, as most people know, communities are done in phases over the courses of years quite often. So that's one thing. In the immediate vicinity of the hotel site, you've also got national franchises. So as they have corporate come in, inspect sites, and look at the locations, naturally they need somewhere to stay. So that's something else that we're going to have Newport Hospitality Group put into place. Additionally, Albert J. Ellis Airport is where all the Marines flying in to go through Marine Combat Training and School of Infantry fly through, and then they go to Marine Corps Air Station New River, where Camp Geiger is located, and they go to the next or the second phase of their initial pipeline of becoming a Marine. So you have thousands upon thousands of Marines flying through here every week. And just to give you an example, I spent 12 years in the Marines, and I was one of those people that flew into the airport when at the time it basically looked like an elementary school instead of a real airport. And I was early, and I took a cab all the way to Jacksonville and stayed in a hotel because I was early. And then I took a cab to check in to that unit that I had training in. Right. So this would likely end up being a location that it would make way more sense for Marines to stay if they end up ahead of time or early. Plus, you also have graduations from occupational specialty schools or MOS schools, and this would be a great location for families flying in to stay as they're visiting people graduating from different training pipelines in the Marine Corps as well. And then lastly, even just on base in general, there are constantly defense contractors going in and out of that base. They need lodging. I've often seen them do everything from hotels to Airbnbs. So this would be another location that Newport Hospitality Group would be working with the base, the Marine Corps base, and then also the businesses in the surrounding areas, the builders, developers doing those residential communities to put contracts to get them to do block reservations in our hotel. Did you want to add anything to that, Ricky?
Well, it might be good to note too that we are part of the development in Richlands.
D-Man, come on, pajamas. Go get your pajamas.
5 minutes from the actual overview you have right now, 5 minutes down the road, I'm personally putting in with Bernard and a couple more people, a 300 plus single family home subdivision as well. So I was born and raised in this area, and I can tell you from what you see, it's changing rapidly. So within the next year and a half, 2.5 years, Richlands is definitely going to have a multitude of folks coming in and out. So even the military families coming in for graduations or what have you, there's nothing in Richlands right now for them to stay in. Everybody's commuting to Jacksonville, and it's really Gum Branch Road is always congested. So I think I'm not being biased. I think our site right now is the time to be putting it in for sure.
Yeah, can I add something too?
Agreed, Ricky. Agreed.
So one of the things too, and Avery touched on it too, was Camp Lejeune is one of the largest military bases on the East Coast. And one of the jobs I had prior to retirement was I was the kind of director of operations for military construction, where we had about $5.7 billion in new construction on Camp Lejeune. Camp Lejeune is getting positioned to absorb a lot of the smaller bases that are kind of around, like one thing I was responsible for was potentially moving Paris Island to Camp Lejeune, because Paris Island, the water table is slowly rising. And so eventually they're going to have to be moving those people over. So a lot of the facilities that they've been building that was approved, that's currently under construction, they're going to be doing a lot of building and bringing in more personnel and more people. And, I know a lot of people don't hear about Jacksonville or Richlands, but there's a lot of money floating around here, especially these little small rural towns that are kind of getting caught up from a development standpoint. Like I give you an example, like the in Jacksonville, the Walmart was one of the top Walmarts, one of the top 5 Walmarts in the state. The Domino's Pizza on Camp Lejeune is the #1 Domino's in the whole wide world, right? As far as volume. So there's a lot of don't be fooled by, oh, this is Richlands, a small town. There's a lot of growth and development, and what's happening is the cost for housing in Jacksonville's gotten so expensive, it's pushed people out to Richlands to have a more affordable life. So when you have these veterans that are coming in and transitioning, they got families trying to find a house, which we have a shortage of houses. Guess where they stay? They stay in a hotel, and a lot of times it's long term. So this will be one of the only hotels that caliber that can actually handle, uh, you know, government lodging contracts and things like that. So there's a huge upside to having a hotel there in Jacksonville, not outside of just it being one of the closest ones to the airport.
Thanks, John. What other questions do we have? Check the chat. All right, I've got
Is this presentation available to see at another time as well? Is it recording?
Yes, it's being
Are you-
recorded.
Okay, thank you.
Okay, it's being recorded, but will you share it? Will we have to ask it? Because I know I have a partner and he just informed me because I only found out about it before 7 p.m. that I let him know about it too late. So
Oh yeah, we'll have the replay and we'll share it with everyone.
okay, thank you very much. And I also have a disclaimer. If you could see my background, I am actually born and raised in Jacksonville, North Carolina.
Oh, nice. Welcome
So-
home.
So when I saw the email, I just got all giddy and I said, I have to be on this call. And so here I am. I'm looking forward to having conversations with John and Avery, hopefully in the near future.
Likewise. Yeah, look forward to speaking more with you.
And so everybody, I dropped a link to the data room, which has got all the stuff. It's got the performa. It actually has a PowerPoint presentation. It's got all the information that you need to be able to make a decision about this presentation. It's got contact information. It's got appraisals. It's got civil drawings, like all that stuff in there. So if you get a chance, click that link, and it's got a lot of that data in there. In addition to a recording, I don't know if it has a recording in there, but in addition, we can send out a link to that recording as well. But that data room has all the information that you need.
Can you drop the Vesterr link, John?
Yeah.
Thank you. And then I see 2 questions in the chat. So one question was the capacity of the property. So this is going to be a 79-room hotel, to answer that. And then also a couple people asked, what's the deadline for investing? Our goal in order to stay within our timeline is to bring on the majority of investment by the end of July. That's going to allow us to close out our financing and initiate vertical construction. What other questions are there?
I have a question. And you may have mentioned this, but I came on late. So what happens if for some reason that construction does not begin after the investments have went out?
With the investments, nothing. So The only thing that money will be applied to is the equity contribution to close out financing to start vertical construction. So outside of that, it will sit there in an account, being what lenders like to refer to as seasoned, so that when we go to close out the financing, we don't have to get into this giant sourcing debacle of where every single dollar came from. Once it's in the account 60 days, they're good with it just being considered your money, no matter how it got there. But the cost to get through the civil engineering and the cost to get through the underwriting, all the things of that nature, that is going to be covered by the cash contributions of the general partners. And additionally, we also anticipate there being equity in the site that's also going to go toward that equity contribution and closing out the financing as well.
Understood. But I also wanted to find out that if for some reason, and maybe I'm not asking the question properly, but if for some reason construction does not begin, I don't know, let's just say a war happens, whatever, something happens.
Sure. If this
and there-
doesn't get off the ground, is that?
Yes, if it doesn't get off the ground, do the investors get their money back?
Yes.
Okay.
Mm-hmm.
And that's all in the paperwork.
That's what I'm going to do. It should say that in the paperwork, but once you start dealing with the securities attorney, they put a small book together. So that's what I'm going to do, and that's what the paperwork should say. And I will go through it with a fine-tooth comb to find that exact paragraph so I can pass that along.
Thank you.
Mm-hmm. What other questions do we have? How many general partners? That's a good question. Oh, someone answered it already. Okay.
Lewis, are you talking? Are you trying to say something? You're on mute. Or maybe she's not. Okay. Thought she was talking to
Hold
us.
on, guys. Hi, I'm sorry. Yeah, I was in here trying to set my hair and everything. I just wanted to ask you, um, what you said, John, about the government contract, that was on my mind. I thought about that since it's going to be like catering to the servicemen and everything that come through the Marines, you said?
Correct. A lot of times when Marine families are transitioning, so springtime is when there's a springtime and summer is when a lot of military families move, just like other people.
Right.
So what happens is they send the family down and be like, all right, you're gonna be stationed at Camp Lejeune. And a lot of times either they're waiting on military housing or they're waiting on the close on the house or rental or something. And it doesn't line up. So where they end up staying in a hotel, and it can be a week to 2 weeks to a month. It depends. I've been there myself. So
Okay.
that's the thing that we have to keep in mind, where a lot of times it's not really necessarily articulated, but in real life, when the government sends a family down, they got to have a place to stay. It's not like they just move straight into base housing. Usually it's a
I
wait.
got you. And
Uh,
can I just interject right there, John? That's where I was going. When you talked about them needing housing and things like that, rather than, and you said they would probably stay at a hotel. Have you ever given consideration to making it like an extended stay for them? Since it's, I mean, rather than it being a hotel, like make it like an extended stay, catering to the servicemen that are going to be in and out of that area.
So for this site, the reason why we didn't end up going with that product is specifically because the feasibility is a study that we did in determining if it would be suitable for a hotel. So that study, it also lays out what the ideal type of hotel product would be for that area. And it was more in line with what a Fairfield is or the similar products offered by the different hotel brands. So that was why we moved forward with that. And we actually spoke to a handful of other franchises, and Marriott not only offered a great product, they had an excellent reputation also amongst owners
Please
as
excuse
well.
my appearance. Mm-hmm.
So that was why we
Okay.
went with that.
All right. I appreciate that. It just crossed my mind. I didn't really want
Mhm.
to jump in, because I'm not really smart when it comes to this type of thing, but I'm very interested. My niece Aquania was the one that invited me to this.
Oh,
Um,
nice.
so I
No,
just
it's an
wanted to
excellent idea.
thank you.
Thank
I
you.
just wanted to jump in. I wanted to make sure it's like, does that make sense to anybody else besides me? Or, have they thought about that? I mean, you know what I'm saying. That's all I'm
But
saying.
it is notable though where the location of the hotel is, like right in front. Avery mentioned it earlier. It's going to be
There you go. Mhm.
restaurant right in the front. It's got a
And
quick.
I was also thinking about the eateries too, because if you're gonna
Right.
have families there, then wouldn't you want to have more of a variety of eateries for them?
Mm-hmm.
Or
Right.
no?
Exactly. So it's a Waffle House right next door. Kind of catacorn is a Starbucks, which is probably like a 2 minute, 1 minute walk.
Any McDonald's around there?
There is right next to
Okay.
it.
Okay.
That's got to be on there. I'll pull that overhead imagery up.
Yeah,
All right.
yeah.
Supermarkets and shopping areas and stuff.
There's
I'm
a
looking
Yes,
at that
full.
book.
ma'am.
Mm-hmm.
Okay. Okay. I'm sorry, y'all. I'm sorry.
Oh
Oh
no, it's
no, we
okay.
didn't fit all that on the
Gotta get
map.
them
So
rollers set right. I get you.
You were not even.
Set
See,
up.
that's why I did not put the camera on
Bonnie,
yet because I'm doing stuff,
actually.
y'all.
It's okay, Miss Jacqueline. It's not a problem.
They're my baby. That's my baby.
Miss
Auntie,
Jacqueline,
Aunt,
there's a Piggly Wiggly right there, as well as a Food Lion and a couple other grocers
I love it.
nearby. And of course, you
Okay.
got your dollar stores in walking distance, and then there's a gas station. I mean, it's
Walmart.
definitely an up and coming area. So,
Okay. Okay. I
yeah.
So,
was just trying to think.
so again, I think this goes back to the question that I had asked earlier. We only need to be concerned the cycle of this endeavor is only going to be 4 to 5 years, correct?
correct.
Okay, so that means
Little bit.
my main concern is yes, I am looking for
Mhm.
long-term passive income, but I'm also I think this would be a great opportunity for something short-term. So yeah, I'm glad this is being presented tonight. Again, I think that's important for potential investors to understand.
Thank you. Appreciate it.
There's been some questions in the chat, Avery, if you want to check them.
Yeah, there's one about a geotechnical study, or as we would call like a soil evaluation.
Well,
Oh,
to
nice.
answer that, we've had a geo study done. That was one of the original studies done after the feasibility study. You have to get a geo study done to build any structure when you're going up. We have perfect soils in Richlands, actually. We got the name Richlands because of the soils. So we have great topsoil and great soil. So yeah, we have done a geotechnical report that came back very well and it allowed us to build 4 stories or higher.
What's the slogan?
Yeah, I'm good with that.
The town of perfect water? I thought it was the town of perfect water.
Both.
Okay.
We were the town of perfect water, but the saying goes that George Washington came through and said, "This is some rich soil," so they called us rich lands.
I like that.
Okay, I haven't seen that one yet, but okay.
And then to speak to some questions that Vaughn Mitchell posed, so that stormwater pond is going to stay there, and that is a self-storage facility adjacent to the hotel site as well. There will not be a pool at the hotel. From the folks that we spoke to, from the management company that we've brought on, it seems to be their perspective and many others that pools, they look great, but they don't make money. They only cost it.
Yeah, they're very expensive.
Mm-hmm.
And you got risk mitigation. You got people slipping up. I don't think I've ever been to like one of those kind of like the small and people are in the pool like hanging out. It's
At the
never
hotel.
so we
So my
utilize
question,
for
okay. I have a question. Are there any other projects of this type that might be happening around the same time?
Yes, is the short answer. I have some projects that are crowdfunding raises as well that are happening on the same timelines. And if you like, you can connect with me. I don't want to take away from this, but you can connect with me about those in case you want to do more than one thing, I can help you with that.
Okay.
Mm-hmm. And then Vaughn asked another good. Vaughn is on it. Vaughn asked another question about food in the hotel. So the breakfast that's served in the morning, that will be the food served in the hotel. But beyond that, there won't be other than the typical snack area where you can go buy little snacks and beverages, things of that nature. But our goal was to keep it, yep, the small market space. Thanks, Bernard, for clarifying. I think so. I think it's a continental style breakfast to answer your last question, Vaughn. But the typical like waffle, oatmeal, that range of things, maybe eggs. I see down south they do the gravy and biscuits often, things of that nature. As
Can
far
I
as
ask a question? Another one about the food. Does Waffle House deliver?
I don't know if they deliver, but they do to-go orders. I've seen that a lot when I go. So we'll
Okay.
have their ability to go directly next door, right, to places. I'm sure
Mm-hmm.
they do DoorDash. I'd be surprised if they didn't do something like DoorDash or Uber Eats.
Okay.
And then I see someone asked about the crime rate in the area.
And
So
they said they said 0%.
I would have to go specifically pull that information, but it's super low because right now there's nothing but fields there. So there's no one there and nothing to take from anybody. So
Somebody
very
said
low,
0%.
very low crime.
When you're talking about
Something
major
about the water.
crimes, yeah, when you're talking about major crimes, that would be 0 for the town of Richlands at the moment.
Okay, great. That was me. I
Zero
asked
crime. I
that
need to move there
question
to myself.
because I know I've been to really nice hotels, but the area wasn't the best. So that's why I was asking.
Just to speak on the area, so if you look at the overview that we're looking at right now,
Mhm.
we're in the middle of what we call our commercial district. Right across the street is our primary school and our high school. And then on the side that we're on is a Navy Fed Bank, which is new, a newer style McDonald's, a Speedway gas station that's going through a revamp because 7-Eleven purchased them. Across the street where you see the orange, there's going to be a out parcel and a brand new Sheetz gas station, as well as over 400 homes behind it. We just got word from the town of Richlands last week as we were submitting a zoning request to get our building permits. We just found out that the parcel behind us, so to the west of the parcel, that the developers turned in a site plan for over 700 homes. So we have a lot of development coming to the area. Right behind that Tractor Supply is another home development that's coming. That's around 250 homes and 120 townhomes. So this is a new commercial district. There's a Highway 55 there. This Starbucks is the biggest Starbucks that was built in the past 7 years. There's a new Wendy's there. There's a Cookout coming. There's a new Dunkin' Donuts there. So this is a new commercial district that's about 7 to 10 minutes from the airport and in a nice area of the town.
Oh, that's good. That's nice to know. Thank you so much.
Absolutely.
Hey, Avery. It says that our national average on crime rate is significantly lower. Ours is 8.15 and the national average is 33.37.
Thanks for looking that up, Ricky. I appreciate that.
And if you go to the Richlands Town Hall, they have the police report every month they post during our town hall meetings, and it's just a bunch of speeding tickets.
Yeah, don't speed in Richlands. Absolutely.
Yeah, do not speed. You will get a speeding ticket. I promise you.
Sweet. Also, someone asked who's responsible for the hospitality. I'm assuming they mean like the management operations of the hotel. That's going to be Newport Hospitality Group, the management that we've have an agreement with to operate the hotel.
Thank you.
What other questions do we have? You're welcome.
Someone asked the capacity of the property. I'm not sure what they mean by that.
If you're asking rooms, 79 rooms.
Yes, I was asking about the room number.
Okay. Absolutely.
And then someone asked earlier, what is the investment time frame for the investors to invest?
Oh yeah, yep. That is, so our target is to onboard all investment by the end of July. That'll allow us to stick to our timeline for closing out financing and starting vertical construction as fast as possible.
And someone asked which airlines. The two airlines is Delta and United.
Mm-hmm.
I have a question, and you may have already answered this at the beginning, but
Okay.
once, let's say you get all of the investments by end of July,
Mm-hmm.
when are you expecting to start construction?
We would be expecting to start construction within 60 days of that, more or less.
So definitely before the end of 2025. Okay, gotcha.
100%. Yeah, I will be upset if that does not occur.
Gotcha. Okay.
It's actually Delta and American Airlines, Bernard. It's not United, I don't think.
You're right. It's Delta and the American.
And then to answer Tanya's question, she asked, how much money have you raised to date and what's your target for investments? And then Deidre asked, what are the investment amounts? So Tanya, to date, we've raised 120,000. Our target total is 2.6 million. We have the ability to oversubscribe to 2.75 million if need be. And then to answer Deidre's question, the investment amounts are, there's one share class that has a minimum investment of 20,000, and that's accompanied by an 8% annual rate of return. And that's not considering the revenue distributions from the operation of the hotel, as well as the distributions from the net proceeds from the sale. And there is a $40,000 share class that is accompanied by a 10% rate of return. And then the shares themselves, right, it's $100 a share, but there's an initial minimum investment of 20 or 40,000 for those corresponding interest rates. So you do have the ability to do more than those numbers. You don't have to do it in increments of 20 grand. It's just that, let's say if you had 23,000, you could do that, but you couldn't do 19,000. And the same for the $40,000 investment. And then Deidre asked if the amount isn't reached by the end of July, would we extend the date to invest? Yes. Pamela asked, how often are you planning to communicate updates to the investors? Will there be Zoom meetings, emails, etc.? So currently planning on quarterly communication, especially during the construction phase, just because things aren't that dynamic, right? You initiate framing, things of that nature, takes a while to get through it, right? Now you start putting in drywall painting, takes a while. So that'll keep it so that you're not basically just being told we're still painting or things of that nature during the construction phase. But obviously that would come with photos, things of that nature. And then once the hotel is open, at present, planning on doing quarterly communications, but we're definitely flexible to seeing if there's a frequency that might make more sense. And we can accommodate that through Zoom meetings, but currently planning to do something more like a newsletter via email. What other questions we have?
I have a question.
Yes.
Is there going to be like, I know in the past, since I've been aware of these type of funding events, is there going to be planned some sort of investors meeting or on the property or somewhere near the property?
Absolutely. When we are approaching opening, everybody's invited to check this place out. I think that'd be incredible for all the folks who played a role in going from 0 to 1 to get to see this place have a ribbon cut and the doors open. So that's something that we've talked about and we absolutely intend to do. We're just focused on crossing the bridge directly in front of us. But that's one that we've got our eye on for sure.
Understood,
Mhm.
understood.
Hey, this is Deidre. I do have a question, a follow-up question.
Yes.
I think the lady asked earlier about construction, and I think the answer was end of December. Well, if that date is moved to accommodate maybe additional investors, how will we be able to meet the actual construction to start by the end of the year? Because we're already in July, August, September.
You cut out briefly during
Yeah.
one of the more important parts of your statement. Can you say that one more time for me, please?
Sure. I said that there was a lady that asked when was construction going to begin, and I believe I heard by the end of the year 2025. So my question is, if the dates to invest are going to slide a little bit, after the end of July, how can we actually start construction at the end of the year?
Because since we have the ability to oversubscribe, if we get to a point where we have the equity needed to move forward, but there's still interest, then to us, it makes the most sense to allow as many people to participate as possible. And we don't have to close out the raise just because we've initiated construction. So we'll have the ability to do both, but to tie into a question asked previously about, what if this doesn't get off the ground? None of the money will be used until we have the ability to close out the financing and move forward. But that doesn't require us to close out raising capital if there are still people who want to participate in the investment. We can
Okay.
keep it open for that.
All right. Thank you.
Mm-hmm. That was a great question. That was good.
Yeah, Ari, I have one question.
Yes.
So what is the total investment of the project?
What's the total investment as far as the total amount to complete the hotel or
To complete the hotel?
roughly 8.6 million. And I'll jump to that slide so you can see.
Okay. So let's say if it is 8.6 million, your estimation, right?
Mm-hmm.
So you pulled from the investors, for example, 2 million, right? So and remaining 6 million, you're going to go with a loan?
Correct, yes. We'll secure debt financing for the remainder.
Okay. But in one of the slide you mentioned the distributions, right? So from the first year onwards.
Yes.
How you are going to adjust the loan payments to the bank and the investors to the distributions?
The way we're going to do that is because the distributions don't start until the hotel's generated that 1.25 debt service coverage ratio. So that's to ensure that we, one, have the money set aside for the mortgage payments, and two, have money set aside for paying taxes on the revenue and addressing any items that pop up in its operation. Before, in that range is the threshold before we start distributing dollars beyond that point. So I'll jump back to that. Yeah. So you see on the left column of that top chart how it has 1.25 and that being the floor for where we start the revenue distribution from. That's how we plan to address that.
Okay. Got it.
Mm-hmm. Any additional questions?
No. Thank you.
Thank you.
I think that's it.
Nice.
All right. Well, thank you all. This will be on the website within 24 hours. So that way you have the replay to share as well as live for you if you would like to make any investments. Thank you, Avery, Ricky, John, Bernard, Tonya. Thank y'all so much.
Thank you.
And if you have any questions about Vesterr, feel free to ask. If you have any questions about the deal, John and Avery's contact information is on there as well. And when's the deadline so that what you can share with folks, the deadlines for folks to invest?
Absolutely. So our initial deadline right now is the end of July. That is our goal, to stay on track time-wise for getting into vertical, so closing out financing and initiating vertical construction within 60 days of the end of July is our target.
Okay. All right. Well, there you are.
Nice.
Thank you all.
Thank you.
Thanks, everybody.
Thank you.
I have to stop sharing for you, huh?
No, that's okay. I can just press in. Thank you.
Thank you.
You have
Thank
a
you.
good night. Thank
You
you.
too.
Thank you all for tuning in. Thank you. Bye-bye.
Bye.